Hi guys, thanks for tuning in to another episode of Nuggets News. Today we're joined by Kyle, or Ducks Trader as most of you know him, and Philip, our superstar, who came up with all this data and his cheat sheet on when to be allocated and when not to be. So we're going to be talking about what stage the market's at, have we topped, and key levels we're looking at and all that sort of thing. So Kyle, any just quick thoughts before we get into charts and stuff?
Mate, we're sitting on the last line of defense for the bull market, in my opinion, at the moment. So the developing yearly VWAP, which is a key level for the year, and the 365 rolling VWAP. And a lot of people like to use a more basic version of those, which is the 50-week moving average. But it's a little bit more accurate to use the rolling VWAP. And we're basically tagged it a few times, sitting right on it right now. So we want to see 100K hold, in my opinion.
And we'll get into what it means if it doesn't when we look at the charts. But what are your thoughts, Philip? I know it's been chopping around a lot lately, and it's been frustrating for you being on holiday. But yeah.
I think if we look at sentiment, and I don't think this is a good metric to look at, but if we look at sentiment on X and eToro, those sorts of social platforms, then I'd say it's all over. But if I sort of zoom out and look at the big picture, which we can get into whenever you like, then I'd say this is just a period of heightened volatility, and we're probably going to be higher over the next 6 months. But I can get into the data as well a bit later, or whenever.
I definitely agree. Like long term, we're looking really good, and it's like macro is looking great. It's just like how long until the macro forces actually kick in, because we've still got things like the PMIs and stuff like that still in contractionary at the moment. We kind of need that to finally hit expansion, and the Fed sort of screwed us by putting rate cuts on pause for so long. And the economy is really hurting. That's why, like, you look at like Chipotle or like Wendy's, like closing down heaps of stores. Even McDonald's is struggling at the moment. So the consumer is really hurting. The bottom end consumer is really hurting anyway at the moment in the US. And I believe that's because probably political bias of the Federal Reserve trying to do everything they can to squeeze Trump for as long as possible and hurt the economy. Their excuse is tariff inflation, but we're not really seeing that much tariff inflation, in my opinion. So I think the Fed have massively missed, and we're paying the price for that. And I think the big thing that's going to happen over the next couple of probably 1 to 2 months is the new Fed chair. It's going to be way more dovish. We'll get it announced.
If we get a Fed, if we get a shadow Fed for sure. I guess it depends if the Fed cuts rates. If they don't cut or hold for another 1 or 2, then they might install the shadow Fed chair, and then they'll be directing policy. So maybe that is. But on the point of the PMIs, Michael Howe, who's the godfather of liquidity, he actually mentioned that the business cycle, which I know Raul Pal does a lot of work on. He doesn't go by the business cycle. He actually said, like, if you look at it, and we've got a chart here, the business cycle hasn't done anything. I'll share my screen. Share entire screen.
Only thing I'd add is it's interesting that with the Fed not cutting, like you said, and the consumer struggling, then Trump mentions these $2,000 stimulus checks. So, is he still trying to keep voters on side going into midterms, and all that as well is going to come into it?
For sure. So, like, we've had the PMI below 50 for the most part. This entire bull run, we've still rallied. So I'm not saying I'm discounting the PMI, but I'm just saying, like, we don't need that to happen in order for BTC to rally. So that's one of those things where I go,
yeah, definitely agree with that. I actually think the whole reason why we've rallied as much as we had is because we've had actual adoption. Whereas like the last cycle was just all liquidity, right? And it was all business cycle, especially the last, pump. It was like the pump from the COVID injection of $3 trillion of liquidity, right? And that was sort of like made PMIs and everything just explode. And so that was more like a PMI driven cycle, whereas this is more driven by ETFs and actual adoption. And like, look at like the crazy stuff that's happening at the moment. Like, JP Morgan coming out and saying that, they're going to launch stable coins, and Western Union launching a stable coin on Solana. Like, this is stuff that we used to dream about, but we're not really seeing it affecting the prices that much. And I believe that we would actually have been in like how everyone was talking about crypto will go into like a 4-year bear market and all that sort of stuff. I actually believe if we didn't have the adoption we're seeing today, we would be in a massive bear market. We probably would just be hanging around like 20 to 40K and like really struggling because we don't have that excess liquidity coming into the market, which just lifts everything, and everything is being purely driven at the moment on merit. And that's why this cycle's been so much different to all the other cycles. We haven't had that explosive growth that we usually see, and that's because it's only coming from pure adoption and growth in the actual use case of the assets versus that hype and explosive growth that you get from excess liquidity.
Yeah, I think when you say adoption, though, it's important to highlight that it's TradFi adoption, not not real world. It's not like we've seen developing countries all taking on Bitcoin, using it for payments and stuff. But it's definitely Wall Street adoption, and I think that's what the story of this cycle has been. Spoke to a mate, an Australian financial planner, the other day, and he was talking about how Australia is about to get another big legit Bitcoin ETF, and then they'll be allocating 1% for their clients. And this guy's doing boring stuff, retirement portfolios, bonds, and now he's saying that probably not this year, but into next year and stuff will start going 1%. So all this is just going to keep that steady growth coming in.
I'm working for a fund at the moment, and we're planning on opening a Bitcoin ETF in Australia as well next year.
Nice.
That'll be a few of them then. Yeah, I see they're still piling in. The Australian BTC ETFs, they just keep trending up higher. Nothing like the US ETFs, but still they're accumulating.
Like all the digital asset treasuries of companies all over the globe, which kind of gives me, I think it's hard to see us going into the traditional 4-year cycle correction if all that is still happening in the background.
So my thing is, right, I think we need to think about like the liquidity flows and what's going to happen. 1st of December, we finally go into QT, right? Is it just going to be choppy and shaky? Maybe we have like a mini bear market that goes for a few months until the new Fed chair comes in, we get clarity on monetary policy direction, and then like the hype and excitement builds up for massive stimulus and stuff like that moving forward. Because remember, the Trump and Bessent plan, Treasury Secretary, their plan is to outgrow the debt. So the idea is they're going to supercharge the economy. I think like we have that in our mindset, like when we're thinking about macro and everything that's going to happen next year and the year after and 2028. But we're not seeing that actually being implemented at the moment because we have a Fed which is trying to work against the administration. So I think it's going to be a very different situation middle of next year, as like obviously June is when the new Fed chair is going to be in. But as we were just saying before, we could have a shadow Fed before that. So I just find it hard to think that we're going to be in a bear market and follow the typical 4-year cycle where we go from bear market from right now until like November, December 2026. And it's just like absolutely brutal, down only, because the last 2 times we had that, we're actually in quantitative tightening. Whereas we're finishing quantitative tightening, I think the rate cuts are going to come down a lot faster once, the shadow Fed or new Fed come in, which will be, maybe March to June next year, right? So I think that will create some sort of a rally anyway. And we're sort of like expecting that to be hitting the market right now, but because we're not seeing things like the business cycle happen and, everyone's waiting for that liquidity to come in, but it's not really there at the moment. I think that's why we're kind of stalling out and the charts are looking kind of gross. Like, and then, on top of that, you add massive distribution happening from long-term holders and OG whales. I can get a few charts up in a little bit and show you guys what all on-chain metrics are showing. But I think the other thing we can touch on as well in a little bit as well is short-term holders, massive capitulation right now, which usually marks very close to a bottom. So let's see.
Yeah. On that rates as well, like if the Fed cuts rates for a second time in a row, then it's signaling an easing cycle, which will, of course, it lowers rates, but it also means lower cap. Russell 2000, small caps, that sort of stuff will start rallying as well. And well, guess what's a proxy to low and small caps is crypto. So I agree that there's right now going into the end of 2026, other than seasonality, I don't think there's that much at all to be bullish about. I think the government shutdown is already priced in, the end of the government shutdown. I think, if anything, what's not priced in is the economic data that comes as a result of the government reopening. And if that starts showing, more weakness in the labour market, which will further reinforce the easing cycle, perhaps, inflation being under control, that sort of stuff, I think where the easing cycle continues and we rally into 2026.
Surely a government shutdown for this long is going to hurt things like inflation, like as in bring inflation down, and also hurt unemployment as well. What are your thoughts on that? Because this is what we're pushing like 45 days or something now for the government shutdown. Surely that's hurting the economy in general for that long.
Well, like we're just talking about with the SNAP benefits, and again, it's that lower class that can't afford food, and you mentioned that it's starting to show in McDonald's and all these retail outlets for sure. But I just wonder if they can keep this weakness going and chopping at that around that Christmas, New Year's period in the past has been when it has marked significant tops or bottoms, and so if we were to drift down to say 90. And then over that Christmas period, thin liquidity, a bit of panic, people thinking, geez, that was the top. And then like a nice wick into the 80s would really scare and maybe get that capitulation before that renewed hope into the new year with everything we've just touched on.
Well, that'd be beautiful, to be honest, if we could get that.
Well, who wants to share some data and metrics first? Philip, you want to go first?
Sure. All right. So, entire screen. All right, so maybe I'll just start with my sort of big picture view. So I've basically said, okay, what are the things that we can sort of focus on as like the things that can shift, or catalysts that can cause a market reversal? This I said back in October. China-US trade deal didn't happen. US government shutdown resolution to spur it. Less, by the way, these are in order of priority or strength. So perhaps, to a degree, and then the inevitable pivot towards rate cuts, end of QT, that sort of stuff. So I think personally, this is just a period of time that, this 4-year cycle narrative has taken hold. People are scared. People have also not done well this entire bull run as well, for the most part, because they've been allocated to perhaps low cap memes or whatever it might be, that's not BTC or the majors, and they've probably underperformed. But if I think about it from the perspective of like, okay, what are we looking at 6 months out? We've got the Clarity Act that's probably coming, probably close to passing. It'll probably happen sometime in the next few months. Government is expected to reopen. As Kyle said earlier, the government has said it's going to run the economy hot, so they're going to grow their way out of debt, and we see that in the GDP now forecast data. POTUS is issuing stimmies. A rate cut is not yet fully priced in. New Fed chair takes over in mid-2026. There may be additional marginal liquidity from TGA drawdowns. SOFR spreads doesn't seem to be a massive deal at the moment. And above all else, Q3 earnings have remained solid in the S&P 500 with 82% beat rate. So if I sort of think about it from that perspective and go, okay, so the broader picture, I've zoomed out, the broader picture is actually positive. What isn't positive is the sentiment around the 4-year cycle narrative. So we keep that in our mind. Then we go, okay, let's have a look at the signal. So right now, the signal is we're still in risk on mode. So from a macro perspective, we're still in risk off on mode. From a BTC, institutional flows or ETF flows rather, we're sort of bottoming on this 10 MA. So just keep these sort of big picture things in mind. We seem to be bottoming.
I had massive outflows last week, like huge outflows last week. And then Monday, they started buying back in huge.
Yeah. This is the data here. So this is last 2 weeks ago. And then last week on the 7th, $500 million here. So yeah, we've had some absolutely, and by the way, since 9th of October, check out the reds. So we seem to be stabilizing around here, right? So now that we've got that, let's focus on like what actually caused the bear market in 2018 and 2022. And if you look at the factors, these things in here, it's things like QT, rate hikes, a stronger US dollar, inflation, and then key geopolitical events acting as further catalysts, risk-off catalysts, and then crypto-specific triggers like ICO, hype bursts, hacks, that sort of stuff. So if I just zoom out and go, I don't have a horse in the race, the macro picture is bullish. If I look at what causes these crashes, because macro is crypto is macro, are we getting this sort of stuff? We're not. We're getting the opposite, right? Fed is ending QT. They're lowering rates. The US dollar has come off significantly. It rallied from September to 100 and has rolled over at the resistance level. Are we getting inflation? Inflation seems to be under control. Are there any crypto specific triggers that we're saying, holy moly, look what's going on? And I don't think there is. As Kyle said earlier, like we've got all this positive news. So for me, then I'm saying, okay, I think what we're seeing is we've got bearish sentiment, 4-year cycle narrative. This may take some time, might bring BTC down to 92, might bring it down to 90. But on the medium term, does it look like we're going to go into a bear market? Not unless we get this sort of stuff, and I don't think we are getting that sort of stuff. The final thing I'll say as well is if I look at the three things that Stanley Druckenmiller says, sort of moves markets, which is oil, the dollar, and rates. And I've got a composite of them three. We've just had oil come off massively. I don't have the oil chart. We've just had oil come off massively. So we're in this sort of green region, which is positive for equities and risk assets. So this is a further sort of, confluence that we're actually just going through this period of, people are scared. And if I go back to 2021, there we go. So from here, September 2021, it's just all been red. We're seeing the opposite. So for me, I think this is just short-term pain, lots of volatility, lots of chop. And I think 2026, Q1, Q2 will be bullish.
And like one of the main things we have to remember is the reason why this year's been so rough and sideways is because of the massive distribution from the OG whales. Otherwise, we probably would be way higher. And, obviously a lot of people trying to make sure MicroStrategy doesn't become the number one stock on the planet as well.
Yeah, and that's
definitely had some.
And that's probably to be expected because there's the bottom of this cycle, which I think all three of us, kind of nailed, it was pretty easy in hindsight for those guys without leverage or anything to rotate back into Bitcoin around 20, a bit under 20 there. And then the cycle, the timing of the 4-year cycle, it all played out perfectly for those guys that had been through, say, 3 cycles. And so we should absolutely expect when they've, 8x their money, 7x to be selling, and it's just being absorbed slowly by all these treasuries. And we know the treasuries and the powers that be, they want to buy lower. So they're quite happy for a bit of fear and to scare people and to get those wicks down to buy and liquidate people like we saw in that flash crash the other day.
Yeah, exactly right. So I think one of the other really important things to remember as well is like a lot of these guys that are selling, like they're not even just sitting on an 8x. These guys are like people that have bought more than 7 years ago, a lot of them, right? So it's like they're selling from buys that they've bought from like under $100. Mm-hmm. So it's like they've been waiting. Some of them are liquidating like massive, like multi-billion-dollar positions, hundreds of millions of dollars of positions. And it's like, what can BTC really do for them when you like have billions of dollars? Well, at that point, it's like only philosophical, I guess, after that, if you want to keep holding.
Yeah, that's an important point about that philosophical, because I think I said to both you guys probably 3 months ago, I'm just a bit disheartened with the way crypto's gone and how this cycle's been all about TradFi. And that was the exact sentiment that we started to see flow through from the whales and the OGs. Crypto's become fake and gay, and it's just about the ETFs now. We set out to destroy the banks and replace the financials with DeFi, and we haven't done any of that. So, I'm definitely hoping, and this recently running privacy coins might be starting to show that at least people are interested when they see all this censorship and CBDCs coming. So all that plays into it, and they can be further catalysts for next cycle. I'm pretty shocked at how Bitcoin DeFi and Bitcoin Layer 2s, all this stuff that the tech's there, and we've had some of our followers, borrow large amounts all from their hardware wallet with this stuff that wasn't available in previous cycles, but it hasn't gained any real adoption or real user numbers. So I'm really hopeful that all that can be another catalyst and tailwind, as well as treasuries buying in that next year and into the future.
I think it'll all eventually happen, but I think the banks are going to have their version, and then there's going to be like a DeFi version as well. I don't think that the mainstream population is ready to go into like the crazy DeFi world yet. Like they're still think about like all the boomers that have all the money. Like they don't even know how to use a computer most of them.
Yeah, and that's where things
they still want to be with the banks, and like maybe like all that DeFi that we're talking about, like lending and borrowing from your wallet and all that sort of stuff, that might only become like a really big industry in like 10 years from now. You know what I mean? And maybe we're just like trying to think that it should be happening too far in advance, and like that's like the future. But still, at the moment, the majority of people where all the money is, like they still want that big financial institution to feel safe.
Yeah.
And that's where it's sort of heading right now. But like we still have this amazing thing, I think, which is what everybody always dreamed about in the crypto space. But I think it might be like 10, 15, 20 years away from actually being like the major thing and taking over the banks.
Yeah, I really hope it's not that long. But that's where Solana and the Sol phone and things like that, I think they've done that way better than Ethereum. Because you need to get that kind of tech that people are already familiar with in the hands of younger people. And then it only takes, one popular TikToker or, one of these huge podcasters to come out and say, hey, I've used this app. I can send money to anyone, blah, blah, blah. And it's got 1 million downloads that day after they've done a podcast about it. So I hope all that stuff still does come. But what are you looking at, Kyle? Do you want to share screen?
Yeah, let's get my screen up. So one of the things I've been talking about, you can see my screen? Yeah. So one of the things I've been talking about is just this chart here, which is OG whales dumping. And this is for wallets that have held Bitcoin in that same wallet for more than 7 years. And so for every yellow line, you've got $100 million plus being spent. For every red line, you've got more than $1 billion being spent from a wallet, right? So we can see that ever since we got to 100K, they've just all been distributing like crazy. And then also after ETFs came into effect as well. So, there's that theory that's going around that this is like the Bitcoin's IPO moment where they're finally getting enough of a liquidity bid from the institutions where the original investors back in, 7 to 10 years ago can finally now distribute massive amounts of capital into the institutions which want to absorb heaps of capital and build big positions and take it for that next leg up. And it's, it is a pattern that we do see in stocks a lot after they IPO. The founders and all the early investors and VCs, they distribute their bags and the chart goes sideways for ages and then it finally goes for another leg up. I mean, I don't know if you guys remember when Facebook first IPO'd, it came out like $300 or something like that, and then it crashed and everyone's like, oh, this is such a failure of a stock. And, that was the early investors distributing, to the institutions and the high net worths and family offices, sovereign wealth funds. And then eventually it picks up and, look at it now. It's one of the best stocks performing over the last couple of years and last decade as well, right? So I think that's something else to have in mind, that we have seen this huge distribution. And like Alex was just saying before, it could be because a lot of OGs are like, man, this has all become like fake and gay. And like I invested into Bitcoin in 2011 and 2012 because I believed in being anti-establishment. And now it's become, we're relying on JP Morgan to adopt it. And we're relying on, the government to start buying. Like this is the opposite to what my philosophical belief is. I don't want to own this crap anymore. And so they're selling multiple billions of dollars, whereas their philosophical beliefs made them hold for like 10, 15 years, right? So that's obviously a big thing. And I think it's just a combination. You have, like look at the seller that Galaxy Digital distributed that $9 billion position. Like, could you imagine $9 billion getting distributed back in any of the other cycles? Like, it would have absolutely annihilated the market. I think we had two more than $1 billion positions distributed, once here and then once here. This is pretty much exactly when QT started as well in 2022, right? So, I think that's something to keep in mind. In terms of like potential bullish structures, I think this is a really important chart to take notice of. Every single time we've had short-term holders in massive loss, right down the bottom of this measurement of this chart, pretty much under 0.1, right, has put in a significant bottom in the market this entire bull run. Okay. Even, we go back to the last time we were down at these levels in the previous bull run, was that 20th of July bottom that ended up sparking the next rally. And that was after a really nasty sell-off, and China had banned Bitcoin mining and they had to move all the miners out. Tesla stopped taking it. So it was a big psychological shift. Then we had massive short-term holder capitulation. And short-term holder just means a wallet that's been holding Bitcoin for less than 155 days. Obviously, we've had come down into these levels as well during bear markets, but pretty much every single time we came down to these levels, we also had a bounce, at least for a little bit, or it went sideways. Like through here's middle of the absolute bear market territory. I don't know if we're like at that territory at the moment. Then it rolled over, right? So nothing ever works 100% of the time, but it's definitely something that is a decent signal I think people should be taking into account, right? So it's like I see something like that, but then I also want to see something like this happening at the same time, right? So in terms of what we're actually seeing on the structure of the chart right now, I think first of all, we have to talk about this distribution range, right? I think that's the most obvious thing that we need to be talking about first. So if we look at the volume inside this range, all the big volume spikes, like this point here, obviously the 1010 was insane volume, but this point here and this point here, all the big volume spikes all happened on down days. So that is something that we look at to signify distribution in the range, because when the big players make trades, their positions are so large that they show up on the chart in the volume, right? And we can see the direction that they're going in. And that especially changed after the 1010 Binance massive capitulation, right? This is Bitstamp. I'll jump onto Coinbase so we can get a little bit of a better picture, right? And then the other chart that I like to look at as well is this one here, which is just the index chart. And that's more of like aggregated of all the volumes of the exchanges, right? And we can see it like much more clearly here. Every time the chart moved down, we had much bigger spikes in volume than when the chart moved up, right? So that's telling us people are distributing, which perfectly matches up with this, right? And then the other thing as well I wanted to show you guys was this chart here. Whoops. Right, so this is showing whale wallets from the whole 1,000 Bitcoin to 10,000 Bitcoin. And look, ever since we've been in this rally through here into the last part of this cycle, look at the amount of selling. Like, it's just all massive distribution from the big players. But they've just recently stopped selling, right? So I think that's something that we need to take into account as well and keep our eyes on this and see what happens. And this is probably, because short-term holders have been completely liquidated. So they're like, okay, we've pushed it to the limit. Let's see what happens now. And then, the inverse is watching what the sharks do, right? And it's been pretty good to counter trade these guys, because when they started capitulating was when we hit the bottom back here. They just started capitulating again. So a few signals, on-chain metrics saying that we could be nearing a bottom. And, that doesn't mean that we're going to go into a massive uptrend and run, to new all-time highs and stuff like that. But we could be at least seeing some sort of a relief rally in the midterm. But what I want to see, this is basically my market map at the moment. So we have this distribution range. Most important level here is this order block, which is the daily order block from Tuesday, 1st of July, right? This is pretty much put in the range low. We see multiple bounces off that level, right? And then we've broken through that finally after it failed to hold as support. Now we came up into that and rejected right off it. So that level, which is pretty much 107.5, this level I've been giving to my community for a long time, and we perfectly tagged that the other day and tried to rally quite aggressively and rejected right off 107.5, right? Then we rolled over one more time. So we're sort of in a position where we've got massive long-term key levels, which is, I'll show you here, the last 2 times we had really big dips, right? The 365 moving rolling VWAP, right? Bounced off it here, bounced off it here, bounced off it here, bounced off it here, right? Now we've come back and we've re-tagged that level. So this is pretty much one of the easiest ways you can just be like, if we're above that, we're in a bull market. If we're below that, we're in a bear market, right? And you put that on your chart, go back over the history and have a look at how well that works. It's really effective. And so if we can bounce off this, we've also got the developing yearly VWAP, which is a major institutional liquidity level as well. So major institutions, this is Goldman Sachs strategy. They will look to buy and sell depending on what price does at these levels. So we've got a bounce between defending through here and rejecting off range low. And it's sort of the battle, like who's going to win out? Institutions that are buying versus the long-term holders which are selling, right? And so to make our life really easy, if we reclaim 107, we're heading back to being more bullish, right? So above 107, we could be more bullish. If we can break this downtrend line, that puts in a high time frame basic chart pattern called a falling wedge, which will shift the narrative back to being more bullish for all of the traders. And they'll be a lot more positive about the market because it creates a chart narrative that we could be heading higher again. So break the downtrend line, reclaim 107, we're looking much better. Then if we can reclaim value area high, which is 113, but ultimately we want to get above these highs through here, which is pretty much 116.
116.
Then we're looking much better again. And that should be the trigger. Pretty much we're going to run to new all-time highs and potentially run to like 137K, etc. If we fail to hold these major levels through here, then that's when I want to be de-risking and we can be looking for, okay, we're probably going to go into more of a bearish market for a while and looking at 90K, 81K as the next key levels. Because at the end of the day, a high time frame falling wedge like this, if it fails, that tells us the bulls have lost that argument and the market is bearish. You can't, because if the market's bullish, that should play out. Because if you think about it like this is the strongest moment. If this attempts to break out, will be the strongest moment the bulls have had in the chart for all this time. So if it fails at its strongest moment, then obviously it's bearish and we're going to go into downtrend for a while.
Yeah, nice. I'm aligned with those levels as well. 98, if we're closing below 98, which is right in line with those levels, we're probably going lower, whether it's 92 or 81, not sure, or lower. And then 107 as the first key level, and then 116, and we're off to the races. So completely agree with all that. One thing I will say with the on-chain data as well is it doesn't account for the people that are just rotating into ETFs. We don't know how much that is, but I put myself in the position of someone that's holding $1.5 billion in BTC on a ledger or whatever, and I go, I'd probably put at least 50% of that in an ETF, let them take the spread because you don't want to lose it, right?
Yeah, exactly.
So,
what happens if your house burns down, someone breaks into your house,
yeah.
Look at that couple that got kidnapped in Dubai recently, the Russian couple. I don't know if you want to talk about that or not, but that's insane to me. Do you have any insider info, goss, on that, Alex? You seem to be always across all the conspiracies.
Oh, I mean, that's been happening for a while, isn't it? The old $5 wrench attack, as it got called back in the day. But yeah, I just tell people, I'm still shocked that there's people bragging about how much money they're making openly on their socials and stuff. If you've got a big follower count, it's just, you got to be cautious of that stuff. Even more so now that people are struggling to get by. Crime's on the rise in Western countries. I think you're insane to be talking about how much money you've made on your socials these days.
Yeah, right. One of the things I did hear, I don't know if this is true or not though, but supposedly he stole $500 million from Telegram. Okay. And the people that kidnapped him were Russians. They've already been sent back to Russia. So they're going to be processed in Russia. So it could have been a Russian mafia oligarch type hit or something. Not sure.
Don't do people dirty is the moral of the story, eh? So
yeah, exactly.
Don't fleece people out of $500 million.
Pretty much, right?
Yeah.
I mean, the only other thing I'd add we haven't touched on today is I've got a guest coming on who's done a lot of research about how Bitcoin might have been created by the NSA and that type of stuff. Again, I don't really know if that affects things too much now that we're 15 years kind of into this journey and it's become a TradFi legit asset, but that could be something that would cause a bit of panic. And again, we know how these things work. Maybe a bit more of that news comes out near a bottom to really scare some more people or something like that. But I think it's interesting watching all that play out because what this researcher has showed is, it might even tie into some of this Epstein stuff and all that as well. But anything to add on Bitcoin or the market in general? And then I'll just maybe touch on Zcash and some of the privacy stuff we've seen lately.
I mean, that's pretty much it for me. I think people just need to be aware of those key levels. And it's like, under the rolling 365 VWAP, we want to be de-risking. And then, you wait until you get a really strong response and a bit of a narrative shift and you can rebuild positions. And typically the best time to do that is when you break a key downtrend. I might just quickly share my chart 1 second just to show this because I think it's quite important for people to understand. So let's just say the market does collapse, right? And we would just extend this downtrend line through here. Let's say, we end up coming all the way down, let's just say $63. That's probably a bit too deep. Let's say we get a bounce off 80K, right? Eventually, this downtrend line will break, and that will be a big signal to be like, hey, maybe I should be reallocating. So that's all I would really say for people to take note of if we do end up playing out bearish and dumping here.
I would say know your scenarios. Is there a possibility that we enter a bull market, go to 60K? Absolutely. Assess it probability-wise. I put that as like very unlikely, so 10%, but then you need to have a strategy for that. So have a strategy for that. If we're going to drop to, further downside, to me right now is just as likely as further upside. I just think the risk to reward is skewed to the upside because from my perspective, I think what we're seeing is something like this, hence why I'm risk on after being risk off for the last month or so. Just open this up. So I said the macro picture is great. We had a liquidation cascade in 2021 as well. In fact, we had them all, a few here as well, kept going up. But this is the one that I'm sort of looking at as the macro picture was actually positive back then. Global liquidity was starting to roll over, but we hadn't had a full-blown, the Fed is going to start hiking. They started talking about that in September, and then we started hiking towards the end of the year into the start of 2022. So what we've seen is liquidation cascade, wick, SFP. Macro picture is still bullish, markets continued higher. And then if we do the same, if we look at the same thing here, we've had the wick, 10-10 wick. We've come down here to 98K, down. SFP on the dailies. So have a scenario for that as well, right? So that's how I'm positioned because the upside is lower than the downside risk for me. So I think it's possible that we do get to 92, but then from here at 100, it goes to 140, 150. Downside is 10%. Upside is, 35, 40% for BTC. So it's a 4-to-1 trade.
I like it. I love how you have that chart mapped out like that as well. It's actually one of the first lessons that I teach my students to map out a chart like that. And I love it that you have a permanent chart that's just mapped out the entire cycle like that. Because I feel like everyone always forgets that that's the most important thing to follow, which is why it's like the second thing I teach in my course. You have to understand and focus on the direction of the trend, the higher highs and higher lows. Because basically all reversal triggers are all we're trying to pick is picking lower lows and lower highs into higher lows and higher highs.
Exactly. Market structure, so important. It's actually one of my favorite tools to use to understand high time frame market structure. Put it in the Roro tool. I actually back tested it as well, and it outperforms a hodl strategy massively. I think by 4x or something. Just pure market structure. So, yeah.
Well, just quickly, we've had a lot of questions about the privacy coins, and Zcash has probably been one of the biggest pumps of this cycle, going from $50 to $700 and something the wick was the other day. I just want people to be aware that Zcash isn't really a privacy coin, and all the major exchanges now have banned deposits and withdrawals with shielded transactions, which is the privacy feature of Zcash. And I don't think it's a coincidence that none of these exchanges that list Monero are now all favouring Zcash and not allowing shielded transactions, and it's got a Grayscale ETF. Its headquarters is down the road from the CIA. So make of all that what you will. There's still plenty of ways to be private on chain with your Bitcoin, Wasabi wallet, Ethereum, Tornado Cash, all that type of thing. And that's certainly stuff we'll be focusing more and more of our research on next year, is all this privacy, whether it's personal attacks, as well as just maintaining privacy and sovereignty from government and powers and institutions. So any thoughts on any of that, guys? And then we'll wrap up.
I just want to share the chart of Zcash.
Zcash.
The people that haven't seen it can see it, because it's insane. Like, I'm so upset that I missed this trade. One of my analysts was actually telling me back in the end of September, she's like, "Oh, Zcash is going to pump," and I was like, "Oh, it's a dead Dino coin. It's not even really a privacy coin anymore." And it's just did 1,500%. I'm just like, "Oh my god, what
that's insane!" Yeah.
Heartbreaking, but you can't catch everything, that's for sure.
No.
I mean,
and where do you come in now, right? Last week it was a month ago it was $70. Now it's 500. Where do you get in on that train?
No. I mean, you had an opportunity here the other day at value high, but I don't know.
It's a bit.
I feel like it could be done. If anything, it's just going to chop sideways for a while.
Don't chase pumps like that. If you got on it, good on you. But don't chase pumps like that.
As soon as it did this, I was like, "Oh, sorry, it's too late."
Yeah, me too. Saw it at like 80. Like, nah, this is over.
Sometimes you just got to miss stuff. I think that's one of the most important things. And for us guys who've been in the crypto market for such a long period of time, you realize you can't catch everything, and sometimes things absolutely send, and people make heaps of money off it, and you just got to be happy for them and enjoy that they've caught the pump, and not be like, "Oh, I have to try and get something out of this," and going at the end, you always just get wrecked.
Yeah,
100%.
Well, guys, I'll put the links to follow Kyle, link to his courses down below. The same with Filip. Filip's still doing updates in our group. You can copy trade him on eToro and follow them both on socials. But, guys, that's been an awesome hangout. It was great to catch up with you both, and we'll do it again soon.
Amazing.
Thanks,
gents.
guys.
Cheers,
Chat soon. Cheers.
I'll see you later.